Hi, everyone. It's Matt Donahue with Mission Financial Planners, and this is your weekly market update for the week of August 11th. Let's go ahead and jump into it. Last week, new factory orders took a bit of a hit. They were down 4.8% from the previous month, but we did get some good news. The U.S. goods and services trade deficit improved to $60 billion. Now, all eyes are on this week. We're getting fresh July CPI numbers, the import price index, and retail sales. So in other words, we're about to get a clearer picture of inflation, trade, and how the consumer is holding up. Remember back in April when President Trump rolled out that 10% baseline tariff on every trading partner? Well, the idea was to boost manufacturing, raise revenue, and shrink the trade gap. 4 months later, we have seen some progress. The Treasury has pulled in record tariff revenue, about $64 billion from April through June. The goods trade deficit narrowed by almost 10%, mostly from reduced imports from China. But just like water finding a new way to flow, imports have been shifting to places like Taiwan, Vietnam, and Thailand. Inflation pressures have been tamed so far, but with tariffs now higher in some of the new trade deals, the Fed's wiggle room to lower rates could get tighter. Musonius Rufus, Stoic philosopher, he had a great take about building nice habits beating good theory. Theories always look good on paper, as we all know, but in life, it's messy. Like Shakespeare wrote in Hamlet, there are more things in heaven and earth than are dreamt of in your philosophy. So in other words, stop waiting for the perfect theory and start acting on the situation that's in front of you. Let's talk a little bit about the adoption tax credit this week. In 2025, that maximum credit is over $17,000 per eligible child. It does start to phase out when household income gets above $259,000. You'll claim that credit in the year the adoption is finalized, even if you paid the expenses earlier. And if it's a special needs adoption, that credit can be even bigger. Employers can also offer adoption benefits, and C corporations can even claim the credit. Parents can pull up to $10,000 each year from retirement accounts without penalty to be able to help cover costs. Switching gears to college planning, even high-income families can cut college costs. You'll just need a strategy. First, don't assume you won't qualify for aid. Use the expected family contribution calculator to see where you stand. Then check each school's net price calculator before your kid applies. That way, you know the real cost after aid and scholarships. Be aware of how assets affect aid. Parental assets are assessed lightly, child assets more heavily. If you're not getting need-based aid, focus on merit scholarships. And here's a big one. Look at the graduation rate. Finishing in 4 years instead of 5 or 6 is one of the best ways to keep costs from ballooning. That's our update for this week. I hope you all have a great week. Enjoy the last few weeks of summer, and we'll see you next week.